This is Trend Following Radio, where great thinking comes alive. Nobel Prize winners, legendary traders, best-selling authors, and the pros that know what drive us irrational human beings. I am your host, Michael Covel. Not filtered, raw, honest. That's my passion.
A few episodes ago, I excerpted an interview that I did. I appeared on Top Traders Unplugged. Today, a little more from that interview. And as you might already know, if you listen to this show or if you have seen my books, this interview is in the trend following headspace. Trend following meaning you got to know what portfolio you're tracking. You got to know how much you're going to bet on each trade. You have to know when you're going to enter. And you have to know when you're going to exit with a win and how you're going to exit with a loss. That's trend following. Because you see, you don't find trends. You take entries. And if you have a venture capital mindset, you're going to have a lot of small losses. But then if you play the trend following strategy out correctly, you're going to end up with some big gains. That's the name of the game. That's the backdrop of the conversation, the excerpt I'm going to play right now. But before we jump in, if you would like to see my free video, drop me an email, michael@covel.com. I will send it along right away. And if you have any questions, same email address, michael@covel.com. Without any further delay, let's jump right into this interview excerpt from Top Traders Unplugged, featuring me. I hope you enjoy.
Another question that came in was just kind of your thoughts on pure trend versus the more multi-strat type trend following that we have seen coming on stream.
That's kind of like a 20-year question. And what I mean by that is, if we look back to the end of the dot-com bubble until now, we're all old enough to think, gosh, that 20 years went by so fast. And I think what's so interesting that 20 years is the interest rate movement and the 2 or 3 bubbles and bursts that happen in it. It's an interesting time in the sense that, are we at a point in time where we can really know who's the winner? Will it be all of these multi-strats that are trying to carve their piece of trend following from the trend? Or will it be some of the tried and true mindsets, great guy like Paul Mulvaney, that sticks to his knitting? It's kind of hard to know, isn't it?
Absolutely, the jury.
Because it feels like this 20-year thing that we're in that started with the end of the dot-com bubble, it feels like, at least this is me, it feels like that there hasn't been a final something yet. Maybe there never will be, but it's just kind of one of those feelings where it's like, if you look at trend following for the last 20, 30 years, I think back to 2002 or even the end of the dot-com bubble, people are like, oh, trend following's dead. Trend following is not going to work. Then 2002 happened. A lot of that was kind of the start of perhaps people believing in what David Harding was doing when he got started. So it's tricky to know.
It's funny you mentioned the whole dot-com bubble. I actually put out something to my clients today where I was just looking at the fact that this is going off script here for a second, but it's quite interesting because the 1999 period looks very similar to what's happening right now in the market, meaning that we have equities at an almost all-time high, so in many indices, but at the same time, we have this elevated VIX at the moment. That happens very rarely for the most part when you have markets at all-time high. The VIX trades 20 or below. At the moment, it's kind of sitting persistently at 30 or above. People may forget that actually when Lehman Brothers blew up, and that was a big event, the VIX only went to 31. So this is actually a pretty high level. So anyway, that's just a sidetrack.
You're just making an observation too. You're not making a prediction, which I think a lot of people get confused with. They'll be thinking, oh, Niels is trying to tell me this is going to happen. No, you're just making an observation.
Exactly. That's right. Speaking of observations, again, one of my colleagues asked for your observation and view of institutional investors' understanding of, but also acceptance and need for trend following. How has this changed in your view in the last 20 years since you obviously became a large advocate for this?
You're probably not going to expect this answer. I don't like institutional investors that are primarily associated with pension funds in the States. And I'm talking about the government variety. I've had a chance in the last 15 years to be around the types of people that generally are government employees doing the allocation of the teachers and the firemen and all that kind of stuff. And I find these people are generally, they're not like you two guys. They're not really, I mean, maybe to some degree, but they usually don't have the professional standards that I would like to see. To me, I get disgusted when I watch what happens with pension funds because honestly, most of these teachers and firemen and all that kind of stuff, they should just be in an index fund. They shouldn't have all these cowboys that work for the government that really don't know what they're doing. And they kind of just like to hobnob with all the traders and all that kind of fun stuff. They shouldn't be in charge of all these pension funds. Now, whether these pension funds should exist, because the only pension funds that exist in America these days are public ones. I don't know that there are really private pension funds anymore in America. So I'm not a big fan. I'm not a big fan at all. I don't know if you were expecting that answer.
I don't think that they are big fans of trend following either, really. I know that some of them have allocations to it. And of course, we know CalSTRS, because it's been very public about it, has probably got the most kind of exposure to this. And I thought that the way they structured it as a risk mitigation bucket has seemed to have worked pretty well for them. But you're right. I mean, there's a lot of interesting reasons and things happening are probably behind the curtain, so to speak.
Generally, I've met people associated with the pension funds and whatnot, making these allocations for all these employees. I've met some of the least impressive people I've ever met in my life, and they're responsible for allocating billions of dollars.
Yeah.
Tooting into the same horn, but with those pension funds, and I've met quite a few in my life as well, they also tend to work with consultants. So there's like this person A running a large pension fund and then, working with consultant B to advise them on what hedge fund they should be using. All the allocations that I've seen and the way that they've worked, I didn't really find them compelling, to say the very least. And now what's really frightening is that because the deficit of these pension funds has become so large and the return expectation needs to be something like, 7 or 8% a year. Well, you don't get that on T-bills. You get that on nothing really. So they're now adding leverage, allocating more to equities or private equity even, in order to meet their return targets. And I just think that that is a disaster that's just going to happen at some point. It's going to hit the wall.
Let me give a fundamental piece of information to kind of go along with that. I grew up in the Washington, D.C. area. 6 of the 10 wealthiest counties' median income surround Washington, D.C. It's just federal employees. And they've got a sweet gig. They've got sweet pensions. They all buy $1.5 million mansions. And that's the gig. Now, the funny thing is the rest of America doesn't really know about this. Private citizens in America, if they don't work for the government, pension doesn't exist. At some point in time, as you mentioned with the 7%, you got to think that the rubber might meet the road. Again, not a prediction, but just an observation. Because at some point also, if the average American finally understands that they wake up every day and they go to work, they don't get a pension, they don't get anything from their private employee, or if they're an entrepreneur, they have to set aside their own money. But if they realize that their tax dollars are going to their neighbor who works for the government, who has a pension, and it's all being put together by, in some instances, literally a Ponzi scheme mindset, let's wait and see.
Yeah. All right. As I said earlier on, I'm going to play the role of the skeptical for the next few minutes, because we get these questions. I'm sure you do as well, Mike. But I mean, as participants in this industry, we get a lot of the same questions and arguments as to why trend following is quote unquote dead. So I wanted to go through a few of them with you and just hear your perspective of this. Now, the first one we've already talked about. People often say that trend following is overcrowded, and that's why David Harding reduced it and all that. We've been there, done that. But the next one we often hear is that QE has killed trend following. What do you think when you hear that?
Well, that kind of gets back to my 20-year window of looking back to the dot-com bubble. I mean, we all know what happened after the dot-com bubble. The fall of 2002, NASDAQ was down 77%, and everyone's seen The Big Short, so everyone knows what brought us up to the fall of 08. We have the fall of 08, then everyone knows what happened in March of 09. March of 09 was a bunch of hanky-panky behind the scenes. We also know that what happened in the fall of 08, if it didn't happen, Morgan Stanley and Goldman Sachs would not exist today. Probably other companies as well. It's a big question. Did QE kill trend following? I don't think there's any evidence for that. I think there's just evidence for the fact that we have QE.
Now, another thing that people would say when they look at our returns, trying to find things that they don't like about it, they're often going to cite and say, yeah, but the last 20 years, it's all down to the bonds, and that's not going to repeat itself going forward. We're going to at some point get off the zero bound, so to speak. How do you think about that, being that it's been kind of a one-sided trend in trend following?
Well, we're just talking about one market. Let me give a little bit of a shout out to your associate who's not on the call, Jerry Parker. Jerry has been talking trend following in equities for how long? A long bloody time. When I was first doing my trend following book, he was the guy that I was like literally looking to in terms of some of his quotations. He's one of the few guys that was addressing trend following with stocks. So, okay, if we don't have a particular group of markets that are not moving, something else is. I mean, that's the whole point of the whole damn thing, isn't it? You can't wake up at the beginning of the year. You don't know what's going to happen. I mean, we can sit here and have these if-then conversations. Okay, bonds are not moving. Well, how many of these tech stocks have moved? That's the whole point of this thing, is that trend following is not trying to tell you what's going to happen with bonds. And you and I, when we do this retrospective and we look back 20 years, I'm not trying to say because what's happened in the last 20 years means X, Y, Z is going to happen in the future. We have no earthly idea.
Yeah. Another thing that people will bring up when it comes to trend following specifically is that nowadays it seems like a lot of the markets have become very interconnected, so to speak, and therefore they end up moving very fast, like we saw in February 18, like we've seen this year, both directions. And that trend followers can't really capture those moves because they have probably become maybe a little bit too slow. How do you think about that? So speed, I guess.
The name of the game is however one wants to do their particular trend following, they have to survive. So we all have to stay alive. We have to have enough capital to play any kind of game. And if we don't know what's going to happen, we can't predict anything. This is really a philosophical question. What does one want to do? What that question is really saying is trend following is a waste of my time. I would just rather trust the passive index. So it's ultimately a personal question. One has to say to themselves, looking at this decade window, multi-decade window that we're talking about, one has to say to themselves, do I want to just trust the system? Maybe that will work. Maybe just trusting the index will be absolutely better than trend following. Just an equity index, no fees, passive. Maybe that's the way to go. One has to say to themselves, do I believe that? Do I want to trust that? Do I want to put my nut on that bet? That's ultimately what going the trend following is all about. One could get into the nitty gritty as you're talking about and say, well, there's what's happening right now at this moment in time on this particular market at this particular time frame. It's still really just a bet of how does one look at the world? Do you trust the governments and the Fed to take care of you, or do you not? That's it.
Something that just came to my mind, which is slightly different to what I thought I was going to be asking you about, but it's kind of interesting, maybe also hear your views on this, Moritz. I know we've talked about it a little bit before, and that is, so over the summer, there was this virtual panel with 4 of the largest allocators to trend following strategies, some of them based in Switzerland, Ireland, Sweden, and in the US. People who are well known in our industry. One of them was saying, but I think they were all nodding, saying that during the COVID crisis, so back in February and March, and these firms, I imagine they would invest with mainly the bigger managers. One of these investors had 4 managers, 4 trend followers, who all overrode their system. Now, in this case, they said, they only did it to reduce risk. But it was kind of surprising. I don't know if you heard that.
How are they still trend followers?
Tell me more.
If you're at the joystick and you're just kind of jerking the plane around when you're on autopilot following your system, and you start jerking the plane around because a bird flew by, and I'm obviously COVID was a little bit more than a bird flying by, but still, right? What's the point?
Yeah, it's kind of funny. I was revisiting something that definitely has kind of slipped my mind when I think back on the conversation I had with Richard Dennis a while back. Always focus on some of his slogans, the trend is your friend and the rules are your guardian angel and all of that stuff. But one of the things he also said, and I only noticed that by looking at the transcript for some reason, and that is he said something that one of the most important things is really the persistence. The fact that when you're systematic, it's the persistence that it gives you that is so crucial. And I don't hear many people talking about persistence but now that I see it again and hearing about these people overriding the systems and all of that, I think it's such an overlooked attribute to trend following, persistence.
Can I give him a shout out?
Sure.
I have to give him a shout out. So many people, when they get into, not everyone, of course, a lot of people see the bigger picture, but a lot of people get into the turtle story and then they get into the Rich Dennis story. And then they go find some article from the 80s, some article from the 90s. And then I get an email. The email says, oh, but Rich Dennis blew up. You really got to dig a little bit deeper, because if Rich Dennis had this all wrong, Jerry Parker would not be here today. Obviously, Jerry's had a long career and Jerry's a brilliant guy and he's done exceptional, but that's where you got to start from. So I think people really need to look at the totality of a Rich Dennis. He put all of this stuff, one of the, obviously the pioneers in trend following, but he put it all in motion starting such a long time ago. And then to give away essentially strangers, here's how you do it. If we do an autopsy of Rich Dennis in the past, okay, somebody can say, well, way back in the day, on a couple occasions, he made decisions with his funds, his public funds, that were not great, or his investors were not prepared for the risk. That's an entirely different conversation as to whether or not he was a brilliant guy with a brilliant trend following foundation who trained brilliant traders. And people really need to separate those two things.
I agree with that. Thanks for bringing that up. And also, if people want to go and listen to the conversation I had with Richard Dennis, and Jerry was on that as well, and one other turtle, you can find that in archives for sure. Final question I had in my list of the things that people often use kind of as a evidence of trend following not working anymore is that they gravitate towards strategies like AI, machine learning, big data, not just using simple open, high, low, close. What are your thoughts when you hear people talk like that?
Well, I sure as heck can't give a better thought than you and Kirk. AI is just something that someone coded. And I remember having the conversation with you, and everything in his office is coded and whatnot. And he's obviously got a big trend following foundation. But I think sometimes everyone has to stop a little bit with some of the, well, it's AI, it's secret. It used to be, it's neural nets, it's secret. I mean, look, okay, Jim Simons exists and he's doing something exceptional somewhere on Long Island that no one's really sure of, maybe at the speed of light, maybe not. But I did find in that Jim Simons book, one of the master quants, one of the guys probably at high frequency, the guy that's perhaps, quote, AI, you go and you look at that book that Zuckerman put out last year, and where does Jim Simons cite his influence? Where was a significant amount of his money? Where did it come from early on? And perhaps still to this day, inspired by Rich Dennis and starting with trend following. It's always fascinating to peer behind the curtain and see how things work, huh?
Completely agree. And just to finish the story about these 4 people or allocators on that panel, they went on to say that the only manager they had to shut down during COVID was an AI manager, because clearly the fund hadn't learned about this kind of volatility, which I thought was quite funny.
You have to learn about volatility with a pandemic, a global pandemic that has not happened in modern times. And they think there's a way that somehow or another an AI algorithm can figure that out in a real-time basis and make decisions. There's a whole philosophical foundation problem there.
Definitely. Moritz, what's on your mind?
On the topic of changing your systems and making alterations or shutting it down and doing things differently because the bird has flown by, as Mike has said so nicely, I think, and I've said this before, a lot of the alpha, a lot of the success that is linked to trend following is really in the persistence and in the waiting. If you are not in a position to hang on to that thing for 4, 5, 6, maybe 7 years in an unchanged fashion, then it could very likely be that you're not producing a positive result. So a lot of the success factor is to give it the time. And reason being is, most of the trend following, the pure trend following systems, they have a Sharpe ratio of about 0.5. And mathematically, I know this assumes a normally distributed world, yada, yada, which isn't true, but mathematically, the waiting time that you have to wait for you to make money with confidence is 1 over the Sharpe ratio squared. So that's 1 over 0.5 squared, 0.25. So it's 4 years for a normal trend following program. You have to give it at least that amount of time before you can allow any sort of judgments as its effectiveness, etc. If you're switching things around, because of COVID, then you've essentially changed the system at that point in time. And the clock starts again. Here goes another 4 years. I just think that's wrong. There may be things where you have a kill switch or something like that because you think markets will become closed and you cannot get out of your positions. I get some of that stuff. But that wasn't COVID. COVID was just markets going down, volatility going up. The setting has changed, but that's it.
It's a great explanation. And how many people truly understand the nuance of what you're saying, in the sense that once you have these trend following traders that these institutional players have allocated to, and then in the middle of chaos, and everyone listening has the ability to go look at track records and look at performance data and find out that chaos or big events has often been a great thing for trend following, as it was in March of 2020. If you're in March of 2020 and you are a trend following trader and you pull the joystick back, or you start hitting the fire button or something, you start doing something a little bit wild, what do you have now? What is that now? What is it? It's not trend following, but it won't show up anywhere. Where does that show up that it's no longer trend following? The marketing documents are still going to be, oh, it's trend following. The public pronouncements are going to still be, oh, it's trend following. It's not trend following. Once the joystick starts moving, that's something else.
I like these responses and answers and your thought also, Moritz, on that. And it reminds me of this Alan Greenspan quote that I actually tweeted yesterday, where he said something like, I know you think you understand what you thought I said, but I'm not sure you realize that what you heard is not what I meant. So
when I listen to both of you guys are on a daily basis involved with the institutional community. You know that I'm not on a daily basis. So I try to be an interpreter, because I know so many guys like you and I know so many regular folks. So I try to be a bridge to kind of take this thinking and this content and kind of bring it down, because you guys need jargon in some sense to communicate complicated ideas quickly with people that know what you're talking about. But sometimes a lot of people might fly right by them.
I think that's really true. And I think that's actually really the art and what we have to, as an industry, to continue to work on. And that is actually our way we communicate. And the narrative of what we do is really important in terms of the future of trend following, et cetera, et cetera. Speaking of narrative, actually, that reminds me, one of the things, or one of the terms that came up probably around 10 years ago, I think it was 2011, our mutual friend Katie Kaminsky coined the phrase crisis alpha. And I've been very open about it, saying that I have kind of mixed feelings about it, but wanted to hear your thoughts on that term. And of course, we know institutions kind of gravitated towards it. How do you think about that? Trend following kind of being labeled as kind of a crisis alpha strategy.
When I see the phrase trend following, and then I see managed futures or time series or this or that, I think they just did all that stuff because that guy Covel is using the trend following phrase too much. And if they start using the trend following phrase too much, send them all to his website. Look, I still think one of the most interesting things for me, going way back in time, and I think I've told this story before publicly, I could say it here, I think it was quite fun, was how I figured out, when I was still trying to piece things together, that John Henry was on the opposite side of Nick Leeson in the Barings Bank fiasco. It was randomly at an event in London. I think there was only 5 or 6 people in the room. It was at some conference, like a Managed Futures Association or something. And I believe Leo Melamed was speaking at the lectern. And in front of me were 2 guys that were the heads of brokerage firms at the time. I want to say Dean Winter and Revco. I'm not sure. Can't remember. I'd have to go find the notes. Anyways, they were kind of elbowing each other and joking amongst each other about who was on the other side of Leeson. I thought this was fascinating because I'm like, well, shit, Leeson's on the front cover of Time. It's a zero-sum game. Who was on the opposite side? No one's talking about this. It's nowhere to be found. They didn't say the name, but I knew enough at the time. They said it was a director, board of directors on the Futures Industry Association. And there was like literally only one trader on there. Put 2 and 2 together and you realize, well, gosh, John Henry's out there getting a lot of publicity about how much money he's made in early 1995. For me, that was a fascinating thing. It was actually Jerry Parker who confirmed that to me many years ago. But for me, seeing that and then seeing additional events, for example, long-term capital management or the ending of the dot-com crisis or 2008, Kathy's great interview and all that kind of stuff, it's just big events. I don't know all of you guys have probably looked at even more in depth the stats. But for me, you can look clearly in the last 30, 40 years that when some of these big events have happened, trend following has done exceptionally well. For the classic trend following trader that actually was not looking at the bird out the window flying by, March of 2020 was yet another one of these events. So whether we call it this particular crisis alpha, or whether we call it a black swan, or whether we call it big event, am I wrong to conclude that when the rest of the world is going to hell in a handbasket, trend following historically has done exceptionally well? Is that a wrong way to think?
It's an interesting topic to discuss. And I think also maybe Katie has changed the way she talks about it a little bit, because suddenly everybody thought that a crisis can be a 2-week event or it can be an 18-month event. But I think what you're saying is big events, and of course with different time frames, is a good way of thinking about it. It's funny. I mean, you bring up Nick Leeson. I don't know. I think you might have had him on your podcast. We had him on our podcast. It's quite an interesting story when you hear him tell what really happened, because it's not exactly as the popular press put it out there. So again, if people want to go back and listen to Moritz and me speaking with Nick Leeson, they can find it in the archives. And another thing you brought up is, of course, John Henry, a legend in our industry, but also someone who took his skills. And when we spoke with Mark, who was the CEO at John Henry a little while ago, and we asked him, so what is really the secret to John Henry? He said it was just his incredible way of being able to focus on just one thing. He did it in his trend following business. And now, of course, we've seen it in baseball and we've seen it European soccer. And that seems to be doing pretty well for him as well.
I think one of the things that's hard too with trend following or any performance track record is people want to see something that's eternal. They want to see it go on forever. If it's not a straight line, for example, with Dun Capital, what's one of the most amazing track records around. I mean, literally. But I think people sometimes have a hard time piecing things together. So they'll look at a story about John Henry and they'll say, well, he did this for 20 or 30 years, and now he's doing sports teams. And they somehow or another think that's a negative. Whereas for those that know, the only reason he bought the sports teams is because he had a few extra dollars that he somehow or another accumulated from a trading strategy that was called trend following.
Yeah, absolutely. We want to be respectful of your time. We know it's Saturday evening where you are, Moritz. So what's on your mind as we start to slowly wind down our conversation with Mike?
Not that much anymore. I think that's very broad ranging. Thank you, Michael. I really enjoyed that. I don't have any more questions.
I see a time when those awake will understand how to make money in up, down, and surprise markets. Whether new trader or experienced, college student or financial advisor, protecting against a crash or just trying to make a lot of money, trend following offers everyone an answer in uncertain times. To get started immediately, send me an email, michael@covel.com. I will send you the right trend following steps to take along with my free video. But if you want to buy and hold, trust the government and trust Wall Street, this is absolutely not for you.